If you own ELF stock or thinking about buying ELF stock, this week it's about to make a huge movement because of earnings. In this video, we're going to discuss about what's going to happen to the stock. What's up, homie? This is Howie. I'm a principal AI engineer with a PhD in physics. Welcome back to Howieverse, where investing is driven by data. In this video, I have bad news and also good news for you. We're going to discuss about the price action and we're going to look at the business in details, why the stock has been crashing from $220 all the way to $56 and what it means in this current earning that's coming up this week. All right, first let's go through the bad news first because that's how I want to start. And if you look at this one, the stock has gone from the all-time high that is $222-ish all the way to $56 at the current trading level. And at the lowest side since the Liberation Day in 2005, that was $50 over here. So the downside from here is capped between 11% to 15% from here, at most 23% if it touched this upsloping trend line, right? That is the downside. But on the upside, the stock is also capped around this level. If you look at this level at $95 here for the 94.99 cents, is essentially there are a lot of times when the stock got up to that level, it's been rejected several times. There is one instance here, the second instance is here, 3 times, 4 times, 5 times, 6 times, 7 times, 8 times. There are 8 times that the stock is trying to break out of this $94.99, but it failed to do so, and the stock has been punished from all the way from $95 level all the way to $56 at this current trading. But the thing is that once it gets to this level, but it doesn't get to this $50 level, all I can think about is that this $50 is kind of like a magnet over here, the red line, the horizontal red line. So it is very close to that level, and it almost want to go down to that level, which is about 11% downside from this trading price, right? So I don't know, it might not happen, but I would say like 70 to 80% of the time, it usually wants to yank the stock down to that level. And once it get to that level, it will bounce by then. I'm just gonna be straight to you guys. In terms of technical, the stock belongs to a dumpster. If you look at this moving average here in blue lines, the deeper blue and also the lighter blue, the stock is currently trading below that moving average. That means the technical or the price action saying that the stock wants to go lower. And if we look at the technical over here, right? So the 1-day technical moving average, it indicates a strong sell. And then the 1 week is also indicate strong sell. 1 month is the same. The 4 hours is also strong sell. So we talk about the downside, but what is the upside from here if the stock decide to reverse, right? So if we take that one, go up all the way to this resistance over here, that is 67 to 68% of upside. Not only that, if we look at this one and we draw like a trend line over here, and then the trend line goes from, I say, this side all the way to this side, and if we take the percentage change to that level over here, that is almost 100% upside when it touches that downsloping resistant level. Now, if you're like me thinking about there is a lot more hope than this, I have this $145 level that is the resistance over here. When we look at this one, the thing is that if we draw the percentage change from the current price action all the way to that level, that is about 160% gain from the current trading level. Once we get this technical out of the way, the bad news out of the way, let's look at the better side and how I believe that the stock is going to get to $145 level from here. and that is the fundamental or the business itself. Let's talk about the business. And one of the most important parts of the business is to look at the balance sheet. And I would try to explain this in English as much as possible. Don't worry about this daunting numbers over here. So the cash and cash equivalent, they have 32% more cash in comparison to the last quarter. And also they have more than 100% more cash in comparison to last year, which is very encouraging to see. 51% more cash coming in this quarter in comparison to the last quarter, and also 18% more inventory. So that means that they're expecting more sales. That's why they are racking up or expanding their inventory, because they're expecting more sales to come. They have $607 million in cash in hand, and they have 2.5 more cash than the bill to pay in the current year, which is really good because that means that the company is not going bankrupt anytime soon, or they're not issuing any new debt, which is what we're going to talk about down here. They have $816 million in debt, right? The debt blow up from $256 million because of the road acquisition. Let me explain the road acquisition, long story short. Road acquisition is the acquisition of Elf, it buying off from Hailey Bieber. Hailey Bieber is the wife of Justin Bieber. So there's a really big branding power backing up the Rhodes acquisition. And I believe Hailey Bieber is still the marketing officer of this Rhodes and how they going to market this road to the customer. And that's why that the brand power of Rhodes still exists, even though it has been bought by Elf. And that is very encouraging because that means that Elf can leverage the branding power in order to sell the product, right? The question is that will this road acquisition pay off? That has been in the mind of investor. That's why investors is not jumping up and down of the stock, because there's still a lot of uncertainty about this acquisition, and the acquisition hasn't paying off yet, and that is something that the investor are afraid of. Let's look at the sales. The net sales or the revenue has been going up 38% in comparison to the prior year in quarterly basis or the 3 months basis. But the cost of sales has been going up 39%. This is really bad for scaling. This means that if they want to sell more items, it'll cost them more to sell more items, which is very counterintuitive, because if you want to sell more items, usually it will become more cheaper. But this means they don't have pricing power. However, if you look at the 9 months, here is 21%, here is 26%. It has been improving, right? So the delta or the difference between the cost of sales and the net sales here is at 5% each. And over here is only 1%. So this quarter has been improving. I would like to see more evidence in the next quarter, see if this is improving. Also, if you look at the gross margin is 71%, which is really good for the company. That means the company has a lot of pricing power. And it also has been improving, where the gross margin here is at 70%, now it's at 71%, which is really good. The selling SG&A is increasing by 28% in comparison to the prior quarter a year ago. And it has been increasing for this 21% SG&A in terms of 1 month. So this particular quarter, they're spending more money in term of marketing. Now, the net income doesn't really matter here. Let me explain why this doesn't matter due to the road acquisition, okay? What matters here is the free cash flow. The free cash flow is the money that they can use for any other operation, like including paying off the debt, because they have such a huge debt in the long-term debt that they accrue buying roads company. So they can make $0 in terms of net income, but if their free cash flow is huge while they paying off their debt, that is what I want to see, is the free cash flow, not net income. So the story over here, or the name of the game for ELF stock, is free cash flow. The annual free cash flow that they generate is 147 million. It'll take about 5.5 years to remove all the long-term debt, as we saw in the balance sheet. Will the free cash flow improve next quarter due to the Rhodes acquisition? That means that the Rhodes acquisition, they have to sell more products to the customer. In order for this free cash flow to improve, that means that it will essentially make the acquisition worth it, right? At 5.5 years to remove the long-term debt, I'm still not convinced that the stock is something to be very, very excited about, right? But this is definitely worth taking notes of, to see if this 5.5 years is actually reducing at accelerating pace, because I would like to see the free cash flow over here to be more aggressive due to the acquisition. Let's look at the other aspect of the business in terms of the customer point of view, or POV. So how easy of their products go in front of the customer eyes, right? Look at this thing that I visit here at Amazon. If I just type in eyebrow, which is one of their best product, and the second thing that I see is ELF at $6 comparison to Neulasta at $84. I don't know anything about this product. Forgive me, I have no expertise in cosmetics, but even though you don't know anything about the products, you can still make money in stock market, right? So when I see at $6 comparison to $84, Neulasta could probably have a higher branding power. I don't know, it's probably could be a better product, or better overall performance, quote unquote, right? So at $6, and just look at the ratings. The ratings is 14,000 at 4.4 star. This one is 800 at 4.3 stars. When you look at the people, the amount of people that is rating this product, it just have that trust of the product, that other people have used it and they have good experience behind it, right? In comparison to this one, there are only 800 people, and this has more trust because of the sheer amount of people that are using it. If I look at different product, I don't know, I just pick another one here. Let's say lip gloss. I don't know anything about lip gloss. Don't ask me anything about lip gloss. The first thing I see, I don't see ELF here. It's Allure winner. I don't even know what that means, but this is at $24. Kiko Milano at $14. If you look at the second row over here, ELF start popping out, right? So just take a look at this. ELF has 25,000 rating at 4.6 star. And if you look at this one also have Allure winner by ELF, and the price is at $9 in comparison to $24 up here, $26 up here, and $14 up here. So in terms of pricing, ELF has very competitive pricing. Well, you might say that, well, this contains more liquid or whatsoever. But yeah, the thing is that when you look at just the price and also the sheer amount of people that are rating these products is humongous, and it just say that the brand is trusted by other people as well. It has that social proof, and people trust the brand even better. When I look at Mecca Australia, so even I just type on the search, the first thing that they're pushing is Rhodes product. I don't know what this do, but this is just encouraging to see this Mecca. Mecca is the Australian Sephora, probably. I don't know. But yeah, they pushing this product, which is very encouraging to see. I want to look at Sephora, right? The thing is that I just type makeup and then Rhodes pop up. That is the first product, and that's really encouraging to see. And lastly, I want to mention this one, Rhodes at Coachella. Rhodes dominate Coachella with its Immerse Rhodes World pop-up activation. It's aligned with Justin Bieber headlining sets, so they partner with Bieber's when Bieber's are performing on stage. And in Coachella, Broads is actually working behind the scene with all the marketing, pushing out their products to all the social media influencer to gain more trust, to gain more sales. So the marketing plan at Coachella has been paying off a lot, and we'll see how that does in the next quarter in terms of how it does to the business. In conclusion, the e.l.f. business is improving, but it's not enough for the investor to jump in. Investors needs more convincing of the improvement of the business quarter over quarter. It was only one quarter, but they would like to see a continuation of business improvement in terms of the growth. And also the technical analysis that we look at earlier in this video, it says that the stock belongs to the dumpster and is not worth to look at yet. This is because the stock is not as sexy as the semi stock like Nvidia, Micron, or AMD. This stock has been overlooked by the investor because the investor are not paying attention to this non-sexy stock. And this is exactly why I look at this stock before people or before others are piling into the stock so I can ride the wave of profit. This is not financial advice at all. If you like this video, consider smashing the like button down below. It'll help out the channel a lot. And if you like more video like this, consider subscribing. I'll see you in the next one.